And a very good morning to you, and welcome to the TriggerCharts pre-market rundown, the first one for 2022, Friday, January 7th. I'm Andrew Horowitz. I am the co-founder of TriggerCharts, and here we are today to go over all the machinations of what's going on in the markets, talk about what's happening with various sectors, why things are doing what they're doing, and to get a deeper and a better understanding of the idea of when we look at charts, what is the most appropriate thing to look at? For example, what we do is, we look at two different things. We look at that price, we look at volume, and that is an important issue to really consider because really what else matters? The question is, how do you look at it? How do you actually find the right tool? And that's what we have developed because it is what we use in our practice, what I use for investing on a regular basis. I have found that over the years, the only way to get a very good level of understanding of where prices are, where they could go, is to understand what traders, investors, mutual funds, what the institutions, hedge funds are doing. And we can get their fingerprint by looking at each and every tick, how much they're buying, what price they're buying it at. In other words, looking at the volume at price at every single level. And instead of using the old-fashioned volume, which is just a mountain chart or a bar chart at the bottom of your screen that shows you each and every day or each and every minute or each and every week, whatever your time frame is on there, what it's doing, what we do is we kind of shift it. We look at it much differently. What we do is we take a look at it and then plot it on a chart and give you what you're seeing on the right here, which are three very simple lines, or at least what you're seeing throughout the Commander series. We are the #1 overall, highest rated, as well as the top selling for a reason in the TradeStation Trading App Store, and that is because people have been making money with what we have here. So the bottom line is that I want you to make sure to try it. I put a link in the chat. And there is a 10-day free trial for all of these, and many of you are either on that or subscribers. And we try to do on Fridays is go over what is happening behind the scenes, not just learning about charts, but also kind of what is going on that's creating some of this. Of course, it wouldn't be a Friday if we didn't talk about the little gotchas here. And investing, of course, involves substantial risk. Past performance is not a guarantee of future results, and a loss of original capital could occur. We are not giving any recommendations here. Please consider all the things that we talk about this morning for educational purposes only. And as always, use your own best judgment when investing. So with that out of the way, there it is. Let's talk about some of the themes. Now, a lot of things have happened since the last time we met, right before the end of the year. First of all, we're seeing a bit of a swoon. Look at the top right now. At the top, you see, where are we? Well, what we are seeing is that there is a significant amount of movement, right? We're seeing that the various indices are fading. Bitcoin is taking a bit of a wallop here. Gold up a little bit, but down from where it was. One of the reasons is that we saw some numbers out this morning, which we'll talk about in a second. Very confusing, frankly, because I've been doing this. Listen, I've been doing this a long time, very long time. And I will tell you that the data that's coming out statistically, I've kind of thrown my hands up with. And the reason is that, post 2008 to a degree, but also newer in towards the mid 2010s, 15s, but definitely, unquestionably, when it came to the pandemic, a lot of the old-fangled, old-fashioned, the tried and true numbers that were being utilized for the idea of statistical reference, whether it's from a manufacturing standpoint, whether it's for jobs data, PMIs, things like that. It's just not working the way that it should. There's something just off with the numbers, and we saw that once again today. But again, let's talk about the themes this week. I always try to come up with a theme and what's going on behind the scenes. It's just kind of noise right now. We got a lot of noise, a lot of noise, a lot of noise. I'm going to say that again. A lot of noise. Reason being that we had end of year and that kind of move to square up on a tax basis. A lot of talk about tax loss harvesting. Discussion about, hey, great year, let's sell some of the winners off. Maybe before there is a significant amount of increase in taxes in the next number of years. A lot of things are going on. So the bottom line is there was a lot of noise into the end of the year and to where we are now. I would like to say that I'd continue that comment through this week. We also have a hearing next week on the on the Senate floor and on Congress, where Fed officials will be getting there. Powell will be getting grilled, looking to get reappointed. And these hearings will be going on, creating a lot more noise. I do think that next week, that after what they did this week of really putting out a hawkish statement from their last minutes, that next week, during their congressional hearings, they'll have a more moderated tone. I think they'll try to soothe markets a little bit next week. Just a guess, but it seems likely in what they do and how they do it to kind of be in that mode during these kinds of hearings. Saw a huge rotation. This rotation that we've seen over the last several weeks where rates went up. And when I say went up, I don't mean just kind of climbed ever so slightly up a very, very slight incline. No, they V'd directly higher into the end of the year, and particularly into this year, only 1 week into 2022, the move has been astounding. Exactly inverse of what you've seen in the Nasdaq as an example. Big moves, and the big moves that are related to outside influences. Again, these are all about what happened with the Fed and what we're talking about with regard to how the Fed is actually thinking about the future. Now we're talking about from waiting until the end of 2022 into 2023, approximately. We're now talking about 3 potential rate increases in 2022, which means that will go from a 0 bound to a 0.75% bound if they do it on a slow but sure basis, which seems the likely manner that they'll do this. You know, even though they didn't have a lot, I think the big issue is they didn't have a lot to talk about the concern about Omicron in the last minutes, which was a little bit surprising. The other thing that you have to note is, hey, we're not going to fight the Fed, right? Don't fight the Fed. And what does that mean? Well, on the way where we are having a very easy monetary policy, where the Fed is being very liquidating and very friendly, where they're trying to build the wealth effect and to increase the liquidity in the markets, where they're trying to keep rates down to foster business growth. Well, where we are now is in a situation that's kind of starting to turn around. So we need to be aware of that. And that's why markets are reacting so severely to a lot of the latest numbers that are coming up. But I got to tell you something, are there buy points out there? Now, this is an important feature right here. I want you to kind of think about this. This area, this buy points right here. We're talking about, are there areas of the markets that we want to consider, even though there may be an overall downstroke here? Now, why would I say that? Generally speaking, about 80% of a stock's move can be attributable to the movement of the underlying market. And we know this due to the fact that there's so much indexing that goes out, and there's been so much indexing that goes on, where you have people just simply saying, hey, I'm going to invest in the SPY, the QQQs, the DIA. I just want to be indexed. I want to be just, the managers that can't beat the indices, all that theory that we've heard for years, and a massive amount of money went to work in that area. On top of that, you have a lot of managers who are closet indexers, where they just say, hey, we are an active manager, but you know what? We're staying very much online with what the indices tell us, the sectors, the stocks, etc. And when you see that the large cap stocks make up a predominance of many of these sectors compared to the smaller stocks, point that I'm making here is that you don't want to necessarily fight a trend. However, sometimes underneath the surface, there are things that may have a beautiful move. For example, over the last number of days, we saw some of the companies like Apple and Microsoft really fell and didn't do well, right? Tesla came back to where they made that big announcement that they had over the weekend, great numbers for their car deliveries. But yet we saw banks, financials, and we've seen energy, just remarkable moves. Once again, today we're seeing that the futures on the Dow are only down 30, which is negligible, where the S&P, negligible, much worse on the Nasdaq. So what's happening right now is really a correction in the Nasdaq, very little movement in the other areas that are not tech related. That's something to really understand and to look at, because if we do straighten out and if we do see a rotation, if we see all of a sudden that the move from the level that we saw on the YMs, it starts shifting back, and we see the Qs start kind of taking over this spot where they're more of the safety play, if you will. Really interesting opportunity. So we're going to look for longer term support. This is a very interesting point right here. We're going to look for longer term support right here. because we want to find that maybe there are some great opportunities that have already corrected substantially that may be opportunities. For example, one of the things I'm watching is K-Web. This is an interesting turn that it had over the last several days. In the face of a collapsing Nasdaq, this is the Chinese technology shares that have been in absolute free fall for months. There's a lot of reasons why that happened. One of the reasons is that the Chinese government is, of course, cracking down and telling people, hey, you know what? You made all this really nice money. Why don't you give it back to the people? Things like that. They're also shutting down due to privacy issues. They're fining companies. They're even going so far as, black bags over the heads of some people and then saying, you know what, maybe we shouldn't talk so much. Think about what happened with Ant Financial when they were going to come out with their IPO and Jack Ma was kind of not seen for a while. So there's a lot of things that are going on in China. But what's interesting to note is it possible that companies like Alibaba and Tencent, and you look at the various players in the technology / financial, but more in the technology markets that are represented by K-Web, K-W-E-B, maybe they have a turn that could be a signal. What I mean by that is usually what I have found, somehow, some way, over these kind of really hysterical moments in market history, when there's a global situation that happens, oftentimes Asia is a leading indicator, particularly China. And I think that's very interesting to look at. That's something that I'd keep on your screen to see, hey, what's going on there? Is there an opportunity? Now, the stock looks terrible. We'll look at that in a second. The stock chart looks terrible. But if there is a turn happening there, and we do see the same thing happening with some of the names, like, for example, the ARK, Cathie Wood, that's just down 48%, down 24% for the last year, down 48% from the high. I mean, we got to look at for when support is going to hold here. This is a big issue. When will support hold? She's talking about a 40-year plan or something crazy like that these stock, or 10-year plan with 40% per year or some 40 number. It was just ridiculous what she was talking about last week. Point is, she's making predictions that this disruptive technology that she's buying is going to be great and keeps on buying into it. However, she's seen a major move on the downside. Yes, she was manager of the year. We'll give her for 2020. But what happened? We've seen one-hit wonders before. I can name a few of them. Elaine Garazella. She called the stock market crash of 1987. You don't know that name? Well, that's because she was a one-hit wonder. Like Aha for Take On Me. Remember that song? You're right? Same situation. So right now what I look for is this rotation. Watch the move through sectors right here. Really be very obvious to watch. Okay, what's moving where? What is kind of holding? What is the place that people want to invest in this environment? Now, if you still see one of the numbers I looked at was the 10-year yield, and we'll get to that here. Actually, let's see if I can pull that up. 10-year yield right here. 10-year yield kind of backing off a little bit this morning here. I got this on a 30-minute chart here. We did get as high as almost 1.770. So this is an interesting number. We're at 1.7 right now. You got to put a point in between here. I just didn't. The decimals on this are a little bit weird. Bottom line is this is the 10-year Treasury note yield, 1.758 right now. 1.758. Now, 1.77 is a big number. I really looked at this from a couple different ways. We got to go back in time and look at where it really peaked out. Right there, 1.7 was the top line that we saw back in October. And you go back in time, you can see kind of these levels are the levels that are really important. Just draw a line right across there. Kind of breached it a few times right here at 1.76, 1.77. We got right up to there this morning, backed off a little bit, and it's backing off. If you do see this turnaround, watch your Nasdaq run. The Nasdaq has really played. Look at this. Look at this move that we've seen over the last, since the beginning of the year. We're talking about from a 1.53 to a 1.72. Big move. And we go back even further, we see that we were down by 1.4 on the 21st. Huge move when it comes to treasuries. And that is a big issue that markets are watching right now. The number today was disappointing. However, the unemployment rate that we saw dropped to 3.9. We saw 199,000 new additions to the payroll. Expectations were somewhere in the 400 range. Big question about, again, the wonkiness of the numbers. How do you see a drop from 4.1% on the unemployment rate to 3.9%, but yet have a real significant miss on the actual number of people working? And this has everything to do with the fact that there is some real flaws, holes, incongruencies, errors, use the word that you want, in the way the collection of data is done right now. And a lot of that has to do with the pandemic, et cetera. Notice how we just saw a spike down just a second in the rate. Look at that, 30 points on the Nasdaq in that same exact period of time. Pretty interesting. So this big issue is going to be reliant on that. We have 17.4. We could probably draw a line right there. Interesting support right there. I really would look at these levels here, 17.26, 22, 23, somewhere around there. Not this bottom one. I like this one better where the high volume mark is right there. 17.21, hover it over. You just hover 17.22. The actual number, we'll put it right on there. That's going to be a big thing, when we see that rates are turning. And if we do get rates turning down again for some reason, that the scare is over, the spook is over, you're going to see this Dow turn down, you're going to see financials turn down, and you're going to see the Nasdaq catch fire. I'll tell you right now. Keep a watch on that. Volatility, one of the big things that I thought was interesting over the last several days with volatility is, it's up, but not so much. The VIX really didn't get significantly moving to the upside, and I found that kind of interesting. Because when you hear things like, oh, it was an orderly sell-off, whatever the hell that means. Bottom line is a sell-off a sell-off. You got 2% and 3% on the Nasdaq. I don't care if you want to call it orderly or not. It's kind of ugly. VIX really is hovering around 20 or so. And I found that kind of interesting when we look at, things. Let's see what the VIX is. $VIX.X. It's 1987. I mean, it just, it's spiked up to 35 back in December once we heard that there was this thing called Omicron, and then came down. But the spike recently in the market move, not that much. I mean, we don't see the kind of moves that we've seen before. And I find that very interesting to note that we're not seeing that kind of spike right now. There's not that much fear out there. I think it's kind of dissipating a little bit. But we talked about this Nasdaq versus the SPY versus the versus the S&P versus the Dow Jones and what to watch there. Also, big differential between small versus large. Right here's a big issue when you see what happens with rates. Obviously, higher rates affect the small caps a little bit more. And the pandemic plays, are we going to push back to them again? We look at like the Zooms and the DocuSigns. Those stocks have been absolutely obliterated. Did they come back? I don't know. I want to mention crypto. A lot of you are trading crypto here, and I want to talk about crypto, and I want to talk in particular about the 15-minute chart. The idea that the 15-minute chart is my favorite chart to look at when it comes to crypto. I know that's a little bit fast for a lot of people, but 15-minute does give us a lot of great day trading opportunities. NFTs obviously are a big issue right now. They are playing along, and why maybe some of the crypto moved up. We got Ethereum down to 3202 right now. Here's a 30-minute chart, which does show a really nice couple. Look at these beautiful drops that we saw here that were playable. Nothing on the inside. From 3,300 down to about 3,200, 100 points right there. Still in the short zone right now on the 15-minute chart. Wonky moves right here, but this was a beautiful move. If you back it up, you can see there was nothing behind it, nothing behind there. Great shorting opportunities if you could do so. I'm going to keep a view on this right here. Look at this. Dropping significantly, 1743. Look at that. You may even see the Nasdaq go positive as rates are coming back down a little bit as markets are digesting the information that we're seeing here. So something interesting. I think the altimeter and the autopilot provide great entry points when it comes to crypto if you're using that. So you're trading crypto somewhere, wherever you're trading it, you could use your charts here to really play that. Economics, inflation, employment report, ISM services came out this week a bit. Some things that we saw, we talked about a few of those. ISM looked pretty strong, generally speaking, down a bit from the last few months. Next week is a big number. We saw some inflation numbers too this week, which are clearly inflationary. By the way, quick prediction. I've been talking for the last several months, many months, about inflation. It's not transitory. It's here to stay. I do think we're at a tipping point on inflation right now. I do think that we are at a point that we've reached a little bit of a near-term peak, especially due to the fact that we have a lot of waning manufacturing and things that are happening, less stimulus, possibility of rate increase, etc. I think it's an interesting time to consider the fact that maybe some of the Fed's job has already been done for them in the economy by slowing it down, tightening financial conditions, by talking about it, and by the very nature of just what's gone on recently. Next week, though, we are going to see CPI. We're going to see crude inventories again. Crude has been on fire. PPI, which is the producer price index, retail sales, and the first look at the UMISH, which I think is going to be important, the consumer confidence for January 2022. There's a 4-hour training course that is free. We usually charge $199 for this, but for anybody that has a subscription, a new subscription to the Commander Series, we will give you the keys to access that at your leisure. It's online, so you can look at it any way you want. Here's some of the stocks we looked at over the last few weeks and some of the ones we're going to look at today. Again, a lot of these things have been very wild. Hopefully you're using your appropriate stops, limit orders, looking at downside risk to on the charts to see, hey, you know what? I've taken my profits. I'm out. Didn't get fancy with it because it would have hurt. I'm also going to mention here that a couple of things. The TriggerCharts entire suite of indicators is available on the trading app store at TradeStation. And finally, put in your symbols right in the chat right there, and we're going to get to it. Let's talk about some of that. This K-Web, I was talking about this. This chart looks miserable. There's no question about that. You know, we drew a line in at 44.41. I don't even know how long ago. It doesn't even matter right now. I mean, that was a level I said, you know, you get beyond that, you got real problems. And we got beyond that. So where do we go now? Well, really got to get above 39.66. Long way from where we are now, a 10% increase from where we are now. But what I'd like to do is see if we do see a bit of a turn here. We're not really seeing it just yet. A little bit of a move on the upside after some support on just some price levels in the 33 range. But, you know, we're really not seeing. We're seeing some oversold situations on the aileron, which is a separate indicator available on the trading app store that we write. We like that because we like to have multiple factors that are confirming our entry and exit points. You know, trend is one, but also more importantly is our levels. You know, these three lines, these are the gospel, the holy grail of what you want to be looking at. Very simple to look at and then color-coded otherwise. You know, I'm going to take this box right now off because it's meaningless at this point, right? That giant consolidation, but I will share with you one thing. I'm going to draw it in again in a different way. So I want to just draw this consolidation we had, right? I'm going to go all the way over here. I'm going to go all the way to the right. This consolidation, oftentimes when you see a significant consolidation, what I mean by that is when you see that there is long-term, we're talking about from August through December, that there was this consolidation for a tight range. You're talking about 55 to 50-ish or 48. What you want to look at is where's the next break? Where's the most logical direction it's moving? Now, we saw that it couldn't get below a certain level, couldn't get above a certain level. Your next break is going to be very strong. When you see a very significant number of altimeters, those three lines that are drawn there, the red, the blue, the green, and on top of that, you see that they're very tight and they're also lining up pretty well. Watch out. Watch out for the next breakout. That's going to be probably significant. Ford, again, long time consolidation. Right here we saw on a daily basis. Look at this consolidation. This thing held from November from 18 to 20 and a half through the beginning of this year and then broke out. Big breakout from 2024. Huge move on Ford after the continuation move of a upward trend with an aileron that is solid and green, looking pretty good. Tesla, you know, again, big move up. Now we're in a giant consolidation through a range of 1,200 to 900. I don't know who exactly wants to play that range unless you're a long-term diehard. GameStop came out with some nonsense last night that they're now getting into the NFT space. They're getting into the area of crypto. So stock naturally moves up $30 up to 161, trading right about here right now. Definitely some level of resistance to the left. Has to get beyond that, 165, but I don't know, 168. Who knows? This is doesn't really play well. DWAC, nice little move on the upside right here. We'll kind of make this a little bit bigger for you. You can see it. Announced yesterday that Trump's Truth social media app is going to be available on the Apple Store supposedly in February. We'll see about that. Down about 7% today, trading at about the 56 range right about here, coming back down after that announcement. CRM dropped off a cliff, just like we've seen with all these other great software names. Not much to go on right here. You do have some support going way back. You have a horrible looking level of overall trend right there. SI, if you want to play crypto and you want an alternative and you want to utilize a bank or financial that does a lot of business in the crypto space, down about 1.6%. Today at 130 and change, high in the 220s, 230 range. Quality company, interesting, just it's just right on there. I mean, I like it longer term from a concept standpoint. It's starting to get a little bit worrisome. I mean, we got a head and shoulders pattern that's clearly been exhibited. Do we make it through what a traditional head and shoulders, down? You take the head, which I guess would be right here. You measure it down to here. Then you take another, move it down here. We're probably at the, off the shoulder, maybe a little bit more downside here, which we could have gotten to yesterday. Lines up pretty well with some other levels of support. Rolling over on the aileron. I like it again from a play into certain spaces. Moderna, looking awful. Nothing great there. Let's take a look at some people asking me about some stocks. NPO look at that. NPro Industries. Nothing wrong with this looking stock here. You got a nice move up here, kind of a flag pattern, I'd call it, right? You see this flag-ish kind of move, then a consolidation inside of here, right? So you see the flag. This is the flag right here. Now a breakout above and a move on a really good level here. Nice looking chart, no question about that. This break was really important right here that got above all levels on the daily. Just looking great on a breakout standpoint. Yeah, look at that. Beautiful looking chart overall. Where's it go? I don't know, but it's looking pretty good. Pfizer, along with all these others, I would think that Pfizer has some room down to about 51 right here. We're starting to see this roll over. Maybe the idea that, hey, it's not as serious as we thought. And then you link up, Norwegian cruise lines, even with all the crap that's going on and the fact that they're isolating people, they're taking people off ships, they're turning off ships, they're turning around ships, all this is going on. Hey, you know what? The stock is holding its support pretty well right here. This is a great opportunity as we're seeing the divergence. Look at this move on the aileron, but more so, where your out is, below about 20 and a half or so. It's kind of a level you may have some concern about back to 1961. There's not a lot of resistance to the left here, not a lot of congestion. Maybe at that 2304, that's where I would lay down my level here, right about there. You get above that, you can see a fly back up to about 25 and a half and change. $3 on 22, not too bad. Mataport, another one of these names that I really do think has a great opportunity, but it's in the doghouse. Fact is that, anything related to all these stocks that blew up dramatically, got overdone, probably leveraged by a lot of people right now, not looking so great. I think it's an interesting buy on the support levels here that we see. A lot of congestion to the left, landed right on it yesterday. So kind of level this here. Again, I'm trying to find some things, as I told you, a theme that are bounce candidates right now and that don't have a lot of downside. We're talking about right now trading at 16 and a half, downside to 1375. From a long-term trading standpoint, that's not a big deal. From a day trade, that's a big deal. But you kind of work it and see if that's something that fits and works for you. Let's take a look just for a second. 1746, still holding down a little bit lower than we did. That big jump, and there we are, down 20, but better than down 85 that were a second ago. Let's see if it starts rising up again and that starts to hurt situations going on. Ethereum picking up a little bit. You see that from that big sell that we saw a minute ago, off of that support line that we drew in, 3151. What else we got? Some people, I want to get to BABA. Somebody asked me about that. That's interesting. Yeah, so BABA, big move on the upside. This is the KWeb. KWeb owns this, by the way. I think this is very interesting. BABA, I told you we'd probably see green on that Q if we can hold right before the open right now in 1 minute. BABA is really interesting. And the last one, IECS, I think it is. Yeah, it looks pretty good. What is this? Very thinly traded. Yeah, this is interesting, but too thin for me. Listen, thank you, everybody, for joining me today. We'll be here next week as well, of course, talking all about this. Go over to TriggerCharts.com. There's plenty available to check out there. All the videos that we do on Fridays, some other information, et cetera. And make sure to stay the course because I think there's great opportunities coming up. And thank you so much for being here today. And and each and every week. I'll see you again next week.